So if you think Evergrande, the $300 billion property developer that's on the verge of collapse, and some people comparing this to a Lehman-like crisis, if you think that's bad, you haven't seen nothing yet. In this video, I'm going to go over how the rabbit hole goes much deeper than that, and how Evergrande was just the first domino, one of many to fall, that exposes the huge, massive housing bubble in China and the huge debt crisis that is happening in China right now. Because Evergrande just going down on its own isn't comparable to the Lehman-like crisis, but what else is going on behind the scenes could be even worse. So the first thing we have to do to understand the situation that we're in is you have to understand how the real estate market works in China, because it's very different to the rest of the world. And China's housing bubble puts all other bubbles to shame. Now, what's very different in China compared to many other countries is people don't actually own the land or don't own the property when they buy it. How it works is local governments normally sell land to developers, normally on a 70-year lease, and developers sell apartments to home buyers and speculators many years before they're built. And what you also have to understand in China is the culture. Owning property is pretty much a must, especially if you're a man wanting to get a wife, because there's a lot more men than women in China. And a lot of families, if they want their daughter to marry a man, they're going to want the man to own real estate. And in China, there's not many other ways to make money. People don't really like speculating in the stock market, and they don't really trust companies' financials. So this is why there's an actual 90% home ownership rate in China. Not to mention, when people put their money in a home or an apartment in China, it may not be just their own. It could be 3 generations of money put together just to buy a home. Because in China, many cities like Hong Kong and Shenzhen, the property to income ratio is 45 times, absolutely dwarfing the housing bubbles where I'm in Australia, dwarfing the New York real estate bubble, Canada, and New Zealand. And I'm sure you've seen a lot of these ghost cities. You may be thinking, why are they building this? Again, because people in China, this is their main speculation and this is their main investment vehicle. And so a lot of people will buy apartments off the plan in China years before they're built. And then when it is built, they won't actually move into it. They will just leave it vacant because the yields are so low, and they can resell it for a much better price 3, 4, 5 years down the line if it's still brand new than selling it used. And so this creates a Ponzi scheme-like scenario where you have the government officials at the top selling the land to the developers, and then the developers selling these apartments before they're built, getting cash from investors, and then using that to repeat the process normally before they actually finish completing the project. So if there's any issues in the way, or there's any delay in money, and they can't sell more and more apartments or can't attract more and more investors, they may not actually have the money to build the apartments or to pay suppliers, like what we're seeing now with Evergrande. And what's different in China compared to the rest of the world is how big the housing market is into comparison of GDP. China's real estate market is worth over $50 trillion, dwarfing many other housing markets around the world. And not only in dollar terms is it the most expensive, but also other economies, like for example in the US, the housing market, when you factor in all other industries like the construction industry, supplies, real estate industries, etc., it equates to around 17% of GDP. Where in China, when you factor in real estate development, supplies, construction, etc., that equates to a massive 30% of GDP. Now, China's GDP is around $14 trillion. So if they have a big hit on this industry, this will be trillions and trillions of dollars worth of growth wiped out like that. Much bigger than the $300 billion issue with Evergrande. But okay, now what you're waiting for. What have we discovered that is much worse than Evergrande? And what is now starting to rear its head that is showing how big the debt crisis in China really is? So look at this, everybody. China's hidden local government debt is half of China's GDP, Goldman Sachs says. That's right, that's not the federal government's debt, just the local small government's debt is half of GDP. Now you may be thinking, well, that's the government's debt, there's no big issues, but people, there definitely is. So the total of the local government's financing vehicles rose to about 53 trillion yuan, that's $8.2 trillion US, so it's not a small amount at all, at the end of last year from 16 trillion yuan in 2013. That equals to about 52% of gross domestic product and is a larger amount of official outstanding government debt. So when people are saying, look, 300 billion, that's manageable, well, look at this, everybody. This is $8 trillion in shadow debt from these local governments, and there still is a lot of secrecy to exactly how much debt there really is with the Chinese government. Because I'll show you an article here, the IMF chief, that's right, the head of the International Monetary Fund, when she was working at the World Bank, got caught manipulating China's economic data. But of course, she didn't get fired. She just said, look, I've investigated myself and I found no wrongdoing. I was just double checking the data. And listen to this, everybody. This is very interesting. So the local government's funding vehicles are a tool for governments to borrow money without it appearing on their balance sheets. But it is seen as the same as government liabilities by financial markets. So there were some signs earlier this year that the government was making inroads in cutting this debt as the economy rebound gave room to focus on tracking financial risks. But now with growth facing more headwinds, including reluctant customers, a housing market crisis, which has caused demand for land to slump, power shortages and supply chain disruptions, markets are looking for signals of a rethink of that hawkish policy stance. So what that means in simple terms is it's not just the developers which have been leveraging massively. And again, they're not just borrowing money from their local markets. As we can see, there are many bonds in the international markets that are priced in dollars, which Evergrande, they missed their payment last week. And then again, they had a bond payment due this week, which they missed as well. So it's not just the local economy in China that's going to be hit. It's also going to be foreign investors as well. And as it said here, they're still facing huge power shortages. We've been seeing there's been many blackouts happening right now in China. Traffic lights aren't working. Factories are having to shut down. And this is going to have even more severe consequences on the global supply chain issues we're facing right now. And this is also going to cause many companies, many global companies, maybe to rethink of having their factories in China, or maybe looking somewhere else like India or Vietnam to put their factories. And so this is what they're now having to do. So more official local government bond issuance. So that means they're going to have to create more IOUs, aka debt, and increase flexibility on local government financing are probably needed to support overall economic growth because land sales are slowing. So again, the real estate market is slowing. And listen to this, everybody. This is crazy. And this shows that we don't actually know how bad of a situation we're really in. So China doesn't have an official account of local government's hidden debt, as it's technically against the law, and private estimates by different institutions vary significantly. Goldman's calculation is based on analysis of more than 2,000 local government funding vehicles, statements of their interest-bearing debt, including bonds and bank loans. And what is this causing, everybody? This is causing the housing market in China to slow down. Now again, the housing market is worth over $50 trillion. So if there's just a dip of 20% in house prices, that is $10 trillion of wealth wiped out like that. So again, this is no small issue, and this may lead investors in China of real estate to have to sell other foreign assets to cover their losses. Because look what they're doing now. Evergrande is having to heavily discount, but it is failing to boost their property sales. So selling prices have fell 11.5% from July to its lowest levels in 5 years, and contract sales values dropped 26% from a year earlier. So if Evergrande is having to make discounts and they're the second biggest developer in China, which they were the biggest before all these issues, then other developers are going to have to discount their apartments, and that means house prices are just going to have to fall. And this just came in yesterday. Evergrande's rating has been cut by Finch on likely missed payments. So what happened is its credit rating has been dropped to C from CC, that's just one level above default level. So their credit rating falls just one more level. That means the market is pricing in that they will 100% default. And so this is leading to panic in the debt markets, in the banking system. And we're seeing now every day China's central bank, the People's Bank of China, is having to inject billions and billions of dollars every day. So China keeps cash engine running in ninth day of injections. So just today, they injected another 100 billion yuan, that's $15.5 billion in US, and we're seeing they're having to do this more and more every single day. So we're definitely not out of the woods yet. And of course, as I was saying, this is going to cause ripple effects on other developers. Evergrande's crisis highlights funding risk for other developers. So we're now starting to see people, they don't want to buy the bonds or the corporate bonds, the IUs from other property developers in China. So this is now having a ripple effect on the whole industry. So again, it's not just this $300 billion developer. This is going to affect the whole development industry in China, which could lead into the trillions. So everyone, what does this all mean in simple terms? Well, what this means is Evergrande is just the tip of the iceberg, and there's been huge amounts of debt and leverage happening in China, not just their federal government, not just the Communist Party, but also the local governments, and this is causing ripple effects on all developers. This is causing asset prices to fall in China, which is going to have consequences if they have to sell foreign assets. And also, again, remember in China, they can't print dollars like the Federal Reserve can to bail out the financial industry. The more and more yuan they print, that lowers the price of their yuan, and that means they have to print more and more to pay back a dollar that is appreciating in value right now. So it's getting harder and harder for them to service the debt as the dollar gets stronger and as their currency weakens. So we're going to have to continue to monitor the story to see if Evergrande does officially default, because again, they missed their payment last week and this week, but they don't officially default until after 30 days. But everyone, that was just my thoughts and opinions on what's going on with the situation. What do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.